Happy Thanksgiving Eve, and hope you guys have a wonderful day tomorrow as well. Ahead of that, maybe we sit around the table and stuff our face and think about market returns in 2023. What do you see in that crystal ball?
Well, I think the first half is going to be a little tougher, Brian. Earnings really haven't come down. When you look at the earnings for this last quarter, even though they were up almost double digits, if you strip out energy, we were negative earnings. So I think the market's still looking at earnings a little too kind of through rose-colored glasses. We do need to bring them down. The question is how fast and how far, and that's really going to be for the next 4 to 6 weeks when we really actually see what's happening in the market. Because the focus is obviously going to be on retail and in Christmas, but I do think as companies see higher wage pressures, higher input pressures, and really at the end of the day, demand, which is what the Fed has been trying to get down, that's going to kind of bring earnings estimates down.
Yeah, how much, though? And have the markets already responded to that?
Well, that's the key question. I think you have to look at it sector by sector, Brian. For us, we want to be overweight kind of the value sectors, the financial sectors that's already trading at 10 times earnings, not 15. You want to be, overweight areas that you think a lot of this has already been discounted, and be careful. I mean, the tech sector, is still, we see earnings estimates still have to come down there just because so much of kind of the valuation there is price to sales and operating leverage that's going to actually hurt them on the downside.
Yeah, is there any sector you're watching more than others? Obviously, Sarat, we know technology runs a show. We get that. We all get that. But I feel like technology's right now, with layoffs and everything, it's kind of going to be off the headlines, and there's got to be new leadership. Oil and gas has been a leader this year. You think they roll on to that in 2023?
I do think oil and gas is going to stay the leader. I think, they've optimized their balance sheets. They've really looked at kind of how their businesses are run. And even at $60, $70 a barrel, they're still going to do well. But I don't think they're going to lead us out of there. I think financials could lead us out of there. I think areas just like certain industrials, you just heard Deere. Companies that have pricing power, that have really optimized balance sheets, that have looked to really create operating leverage. I think that's where you're going to see it. And it's going to be, when we say we go back to the old playbook, those are some of the sectors that are going to take us out. And also the other area to watch for is commodities. I mean, some of these companies, in the metals, nickel, aluminum, copper, that's going to be an area where, demand is going to far exceed supply. And if they can price, so the playbook is different. And I think investors have to look at specific sectors, specific companies, not just kind of say, hey, everything is going to ride.